What's going on, everybody? Welcome back for part 2 of my tutorial series on the system. So during the first video, I introduced the basic concepts. We started with the 50 SMA, added the 10 SMA. I talked about how bulls are in control whenever we're trading above the 50 SMA. Bears are in control whenever we're trading below the 50 SMA. We talked about the buy signal. We talked about the sell signal. Now in today's video, we're going to be introducing a few new concepts, starting with multi-time frame analysis and moving into the slope of the moving averages. Now, before we get started, if you guys could do me a huge favor and give me a follow on Twitter at DwayneTrade3. I talk and teach about the system all day long. I think you guys would really enjoy my content on there if you're not already following me, and that would be a really nice way for you all to show support. But without further ado, let's get into the video. All right, so the first concept that we're going to cover in this video is multi-time frame analysis. Now, in the first video, I talked about the 30-minute SPX chart and how we can use that to predict future price. I also use the 1-hour SPX chart. So I'm never using just the 30-minute chart, and I'm also never using just the hourly chart. I use these two charts in conjunction in order to build stronger conviction whenever I'm entering a trade. So let me explain exactly what I'm talking about. Up here, I have the 30-minute chart. Down here, I have the hourly chart, both SPX, okay? I would consider these two charts together the system.
That's your system? That's my system.
The true system is, of course, the 30-minute chart, but the hourly chart helps us to add conviction and helps us to identify where momentum is headed in the market. I have an example pulled up here. So recently we got a sell signal on the system, which is the bearish cross of the 10 SMA below the 50 SMA, and we started to break down below this 50 SMA. Now, had you not been using the hourly chart, you would have been shorting blindly into this move. But if we take a look at the 1-hour chart, you can see how we got a really strong bounce off of the 50 SMA, and the 50 SMA on the 1-hour chart served as support. So what does this mean? In order to take trades, we want the two charts to be telling the same story. When the two charts are telling the same story, we see stronger moves. We see opportunities where we can enter trades with higher levels of conviction. Now, on the flip side of that, we can see how we were trading above the 50 SMA on the 1-hour chart. We reclaim the 50 SMA on the 30-minute chart, followed by a buy signal and a massive green candle into the close. And those are the types of moves that I look for when both charts, again, are telling the same story. Here are two really good examples of the powerful results that we can see when both the 30-minute chart and the hourly chart are telling the same story. So we got the sell signal on the 30-minute chart. We got that classic breakdown below the 50 SMA. We start to tell ourselves, okay, bears are in control, but we go and we check the hourly chart and we want to see what that is telling us. And what we can see is that once we broke down below the 50 SMA on the 1-hour chart as well, we got a massive flush. And this was a 100-point move down from that 50 SMA. Now, the same is true on the flip side. After that sell-off, we come up and we run and we break over the 50 SMA on the 30-minute SPX chart. Now we go and we check the hourly chart and we check to see what that is telling us. Breaking over the 50 SMA on the 1-hour chart as well. And we see the power of that move. Another great trade opportunity. So in general, the way I like to think about this is the 30-minute chart helps us to get to that move a little bit quicker. We'll get the break on the 50 SMA before we get the break on the hourly SMA, or we'll get that buy or sell signal on the 30-minute chart before we get the buy or sell signal on the hourly chart. But in order to hit those big trades, in order to catch that strong trend in the market, we want to see both time frames telling the same story. So the next concept that I want to cover in today's video is the slope of the moving averages. This is very important to understand. Once I caught on to this concept, it completely changed how I viewed the system. So we know we have our two moving averages, the 50 SMA and the 10 SMA. The 10 SMA is what I like to call our visual representation of trend in the market. Anytime we get a sell signal or anytime we get a buy signal, the strength of the sell-off or the strength of the rip is visually represented by the slope of the 10 SMA. Now, what do I mean by this? After we get this sell signal, we can see how we stayed below the 10 SMA, we come up to the 10 SMA, we curl lower. But then once we broke above that 10 SMA for the first time, the market starts to flatten out, it starts to chop, it gets harder to trade, and then we're just waiting for the next signal. Same exact thing happened when we got the buy signal here. We get the buy signal. The break over the 50 SMA, we get the buy signal, which is the 10 SMA crossing over the 50 SMA, and we're trading above the 10 SMA, and look at the strength of that move. Visual representation of momentum in the market. We can see the strength that the bulls have until finally the 10 SMA is broken, and what happens? Chop, 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 right? So the 10 SMA is a really important tool to use. It's not just there for buy and sell signals, but after you get the buy and sell signal, you want to be watching the slope of the 10 SMA. The steeper it is, the stronger the trend. Once we flatten out, once that 10 SMA flattens out, doesn't matter if it's after a sell signal, doesn't matter if it's after a buy signal, we know that there's a greater chance for the market to chop around, and it's best to just sit on our hands and wait for the next signal. So now let's talk about the angle of the 50 SMA. This is again a visual representation of momentum in the market, but on a higher time frame. So when the 50 SMA is sloped high like this, super steep, climbing up, climbing up, climbing up, we can expect for dips to be bought at that 50 SMA. So I'm reintroducing the hourly chart here so you guys can get the entire concept down. So we have the 50 SMA on the 30-minute chart. When it's angled higher, super steep, climbing higher, we can expect for dips to be bought at that 50 SMA. Now, not every dip is bought at that 50 SMA, but what we can also anticipate is that the sell signals or the sell-offs under the 50 SMA are going to be short-lived relative to the rips or the moves higher when we are trading above the 50 SMA. So we have our hourly chart down here, and we can see how the 50 SMA is climbing higher, climbing higher, climbing higher. And what we're seeing here is that, yes, we might get a break below, but this is getting bought back up. Here's a false break below the 50 SMA on the 1 hour chart, a dip bought at the 50 SMA on the 1 hour chart. And that's simply explained by the angle of this 50 SMA and how it is super steep, continuing to climb higher. And then we take a look at the 30-minute chart, and using these two charts together, we can see how the 50 SMA on the 30-minute chart is climbing higher, the 50 SMA on the 1 hour chart is climbing higher. When we get a sell signal on the 30-minute, we want to be looking at the hourly chart. Are we getting a sell signal there? No, not quite. That's why that was short-lived, okay? This sell signal, another one that was short-lived because we have that strong 50 SMA support on the hourly chart as it's climbing higher. So the general concept that you want to understand is that the angle of the 50 SMA is very, very important. The steeper it is, the more likely that you'll get a bounce at that 50 SMA. And if you don't get a bounce, it's more likely that the sell signals under that 50 SMA will be short-lived. So now the question is, when can we anticipate that a sell signal is going to play out? How do we know? We of course have our multi-time frame analysis, so we want both the 30-minute chart and the 1 hour chart to be telling the same story. But also, when the 50 SMA starts to flatten out, that tells me, okay, the bulls are losing a little bit of momentum. The market is relatively flat, looking to make that next move. It's ready to shift short-term market direction. As we saw here, 50 SMA was climbing higher, climbing higher, climbing higher. Then it flattens out, and you can see how we break right through that 50 SMA and get the sell-off. And vice versa, the same is true when the angle of that 50 SMA is sloping downward and it's moving strongly downward. We would expect these pops to be shorted. We expect all the pops under the 50 SMA to be fake bounces to be shorted until we break back above the 50 SMA where bulls regain that control. So to recap this video, we discussed multi-time frame analysis. We talked about how we want the two charts, both the 30-minute and the 1 hour SPX charts, to be telling the same story when we're looking to take trades, because when they tell the same story, there's a greater chance of the market generating a strong trend in that given direction. We also talked about the slope and angles of the 10 and 50 SMAs and how the 10 SMA is our visual representation of momentum in the market, and how the 50 SMA helps us to determine whether or not a sell signal can be a true sell signal, or whether or not a buy signal can be a true buy signal, and it helps us to identify on a higher time frame where exactly that momentum is in the market. Thank you guys for tuning into this video. I seriously hope that this is a big help for you guys in your trading. If you did enjoy the content and what I had to say, if you're enjoying the system, using it, and finding that it's helping you in your trading, give this video a like and subscribe to our channel. I'm already looking forward to making part 3. I'll catch you guys on the next video.